We're taking a look at Blast, a new cryptocurrency blockchain started by a 24-year-old founder, having raised over $500 million that was bridged over into a multi-sig wallet, and still nothing built to date. This is Sasha with Arcanum Ventures. Today, we're going to take a look at the on-chain data around this wallet and see if we can uncover any interesting things. Let's dive in. Carmelo, you ready to have a blast?
Yeah, I'm excited for my first on-chain analytics feature appearance.
It's good to have you here. I think we're going to need your brilliant mind to talk about what we're really seeing. And so we've got the Blast website up here. For those of you that are unfamiliar with Blast, it is a supposed layer 2, Ethereum layer 2 with native yield for Ethereum and stablecoins that is promoting a very, very large airdrop. And so the funny thing about what's happening with Blast is that they haven't really built anything yet, as far as I'm aware. Carmelo, do you know if they have a blockchain or a network or anything?
They literally haven't built anything. It's strictly a multi-sig wallet that is collecting money with the promise of maybe possibly building something. I mean, based off what they've raised so far and the reputation of the backers and the founding team, I would bet that they're going to build something, and probably something impressive too. But just the fact that they've been raising so much money just off of an announcement is absolutely wild.
That's the crazy thing here, and I think that's the controversy that we might be seeing. And so I'm going to go ahead and show what I'm seeing on EtherScan. This is the Blast multi-sig wallet. It's not a blockchain. It's not a layer 1. It's not a smart contract. It's a multi-sig wallet that is holding close to $650 million worth of liquid assets. And by liquid assets, I mean mostly Ethereum and stablecoin. And this money was provided by people that are investing or buying into the idea of Blast network in hopes that it's going to be built and take off. And so they've raised $650 million on hopes and dreams. And the other fun thing, I don't know if you remember that tweet I just showed, it says we're hiring a senior DevOps engineer and senior protocol engineer. So they've raised the most absurd amount of money, and now they're hiring to build. But, Carmelo, in this video, what I want to do more specifically is talk about, where did this money come from? How did they do this? And what are they going to do with it potentially? So I've got this Blast multi-sig wallet analytics dashboard up that I put together with a lot of the on-chain transaction data. And so one thing I want to show you is really interesting. Maybe you can shed some light here. If you look at this chart, we've got the number of transactions. So basically transaction volume over the span of that multi-sig wallet going live. And the funny thing is this data, I put this together a couple days ago. So in the past 2 or 3 days, they went from, I think, $580 million to 650. But if you see here, there's some massive swings in the transaction volume, and these are around 12 hours apart. So one thing I want to ask you, what do you think this might be? Is this money coming from one specific part of the world?
It could be anything. I mean, I haven't looked too much into the airdrop campaign or whatever you want to call it, but it is unique. It is impressive. They did execute pretty flawlessly on it, especially after Blur Marketplace did something similar. But one thing to note is that it hasn't necessarily raised money in the past week, maybe. It's more that ETH has pumped significantly. So I imagine it's a weird time to contribute ETH to a crowdfund campaign when just holding it would have yielded some impressive gains itself. But yeah, it's weird that it's pumping every 12 hours. It could be time zone related, or it could be some sort of auto send, or maybe contributing periodically. And it could be the same wallets for all we know.
Yeah, it could, and this very, very much could be, for example, some sort of insider buys somehow. Maybe this money is coming from the Blur ecosystem, or they have every incentive to try and deposit more and more into this multi-sig wallet because it's directly linked with the speculation and the buzz that's being created behind this. One thing I saw here in the actual transaction volume, so this is USD amount of deposits on a 2-hour time interval. There are 2 massive spikes here, and so if you take a closer look at that, you see November 23rd in the evening, I'm sorry, November 22nd in the evening and November 23rd in the morning. And just going back to um, the Twitter page, one of the cool things that you could do when you see some spikes like this is try and understand how does it correlate back to speculation that's being created. And this is something that some teams will sometimes do after launching a token. They'll create some sort of big announcement and try and capitalize on it when people buy in and say this is a good thing, I want to invest more, and liquidate some of those earnings. That's not happening here. But if you look back, I've got so here we go, November 22nd and then November 23rd. And so these are the only tweets around this entire area. I think this was the first update they started giving around TVL. So they announced 81 million in TVL. That spiked transaction volume, and then 230 million in TVL. And so maybe people saw these numbers and decided, oh my God, this is crazy, I want a piece too.
Yeah, that's when the FOMO started setting in. But I think one important thing to note also is this isn't explicit fundraising. This is TVL. So help bridge your money to our ecosystem, give it some sort of authority so it looks like it's actually doing something. But like you said in the beginning of the video, there is nothing to bridge it to. It's just a wallet full of ETH right now. So
Yeah.
I've heard that they're going to send back, or investors or whatever you want to call them are going to be able to access airdrops or their funds in late February. But I'm still not exactly sure why you would lock up your own ETH in somebody else's wallet just for the promise of maybe getting it back and maybe some returns. I mean, it's as speculative as it comes in this space.
I mean, you're right. Technically, it is actual TVL. It's total value locked because it's supposedly locked in a multi-sig. But I wouldn't. That term is typically used for like existing networks, protocols, or blockchains. And so the
Yep.
fact that it's simply a wallet, I'm gonna treat it like it's something like Ben.eth, where people are just dumping money into a black hole and maybe calling it some sort of investment. And if you look at the breakdown of what's been coming in, so the majority of it actually was Ether.
hmm
But there's a lot of people that are dumping USDT, USDC, and DAI. So another cool thing I saw here is like the majority of stablecoin coming in is DAI, and you say it all the time. DAI is like the most decentralized stablecoin, which feeds into the idea of reliability, safety, and security. The other interesting thing I saw is like USDC, the volume there is larger than USDT, and so I guess this is kind of like validating what we've been seeing in the blockchain space. USDT kind of losing some steam or some, I guess some aspect or some like perception of being secure to some extent, and USDC picking up.
Yeah, I mean, I'm not sure. I wouldn't say one is more secure than the other. But it is interesting to speculate on why that is, why USDC is more largely represented, and why DAI is even more largely represented. I mean, maybe DAI is usually held by people that participate in DeFi and believe in more decentralized ecosystems. So maybe these people are believing in Blast more than your typical investors. I don't know why, because it's not anything yet, let alone a decentralized network. But maybe it kind of speaks volumes about who they're marketing this towards.
It is kind of crazy. I mean, I guess this is a bullish sign for DAI. Good for them. One other thing I've got down here that I wanted to show you is a kind of breakdown of deposits. And so the idea, and everyone's heard of this in the world of crypto, the idea of whales. And so we've got whales, fish, and minnows here breaking this down. And so we're defining a minnow a minnow deposit as a deposit of $100 or less in value, a whale deposit of size $10,000 or more in value, and then anything else in between is considered a fish. And so if you look, like here's a pretty good breakdown of the number of transactions or number of deposits coming in. At first, it started off, looks like a grassroots effort kind of. The majority of deposits coming from what we would call minnows in this circumstance. So we've got like a lot of deposits that are under $100 coming in. Then we've got a massive number between $100 and $10,000. But the interesting thing here I saw as time went on, as I guess this picked up more and more steam, there's a clear trend. Like the sizes of deposits that are coming into this multi-sig wallet are increasing on average. We're seeing more and more large deposits trending upward. The same with fish, less minnow deposits. So that was kind of crazy. It's like, I don't know, people, I wouldn't call them institutional investors, but people with a lot more capital are gaining some confidence behind Blast after seeing a lot of this momentum. And so that might be like a result of these tweets or the TVL or what's happening on crypto Twitter. So yeah, a lot of money coming in here.
Well, if you think about it, this isn't your conventional network or token offering launch. There isn't rounds, there isn't seed from what I've heard, there isn't private rounds, strategy rounds. So make no mistake about it, this does have institutional investors. They're just not being announced, or they aren't in there like you would traditionally hear about. So all we know is that Paradigm is behind this in some way. They're backing it. And since they haven't just contributed a transparent large amount, maybe they're responsible for a lot of these transactions, these whale transactions. Maybe they're periodically putting in 10,000 every 12 hours, let's say. So we don't know. And then I imagine that there's other VCs, other angel investors, other exchanges or big players that are also deploying capital into this quote unquote TVL just to invest in it early, like they might be doing for Optimism or ZK Sync or Arbitrum, other layer twos that they are able to invest in the traditional sense.
It's a really good point. And the beauty of having this like decentralized multi-sig, and it's all just undoxed on-chain data, is that there's really no way of verifying any of it. But there's one thing for sure. I mean, if you look at this is the breakdown of deposit volume. The majority of capital coming in is from deposits that we would consider whale deposits. So like very, very large deposits over $100,000. And you can kind of see here, there's a breakdown of the different types of, or the largest depositors. And so you see like at the very top, this one address, for example, made 5 deposits equaling up to $31 million total. So like $6 million each. 31 million there, 11 million. And here's the breakdown. Just visually, you can see like there is maybe a concerning level of, I guess, centralization of the token supply when you consider there might just be like 10 or 12 addresses that hold like 30-40% of the entire TVL here. So that's a bit concerning.
Again, though, this is a TVL, but not actual TVL. This is just sent to a wallet. So there is no promise. There is no transparency or visibility on what the promise is for these people to send their money. So, that big blue chunk you see right there on your screen, that could amount to nothing. That doesn't mean you're going to get that many, that percentage of tokens when there is a Blast token eventually. Maybe it just means you have a good chunk of airdrop tokens, but maybe they allocated 3% of total supply for Blast for their launch. Like, we don't know that. We don't know anything about it yet.
Yeah.
Which is kind of leading back to the point. They've raised so much money. I don't even know how much they're going to keep out of that raise, or how much is in their wallet, why they need that much, how they've managed to raise without any insight into what they actually want to build, besides the fact that they say a layer 2 for yield. Okay. Is that the point of a layer 2? I'm not sure why that matters.
It's kind of crazy. And so I guess that takes us to our last point. I wanted to, kind of bring some perspective into this for you guys. I know I was watching the Bankless podcast, or I think it was last week at some point. They were talking about Blast, but one of the things that blew my mind that they said is that the entire TVL that's locked up in this multi-sig exceeds the TVL of the entire Solana ecosystem. And so that really blows my mind. And it got me thinking, like, let's take this back to the real world. So, the Blast guys raised $650 million, or at least TVL, that's locked in their multi-sig. They're in possession of $650 million worth of liquid crypto assets. I mean, that's cold, hard cash pretty much. And it started making me think, like, how does that compare to a lot of companies outside of Web3 that you and I know? And so here's an entire list of publicly traded stocks that are all around $650 million in market cap. And so I see this one just as an example because I'm familiar with this brand. I think a lot of people might be if you've watched movies. Smith & Wesson. So Smith & Wesson makes firearms. And I just want to give some context of like what this actually means. So if we got this open here, I'm going to show you guys. Here are some metrics for Smith & Wesson. And so if you take a close look, this is a global company. They have 1,700 employees. They have developed over $500 million in sales in the past year, and of that, $36 million in income. But by all intents and purposes, technically, this Blast multi-sig is worth more than this entire global company. And the fact that they haven't built anything or created anything blows my mind that things like this still happen in crypto. I don't want to say that, like, the creators of Blur, these Blast founders, they're not worth it. I just want to bring into context how crazy this industry still is. It just blows my mind, man.
Yeah, not to mention that Smith & Wesson has been around for, hundreds of years? It's wild.
It's crazy.
But yeah, you make a good point. This is not to detract from what they've done. Like, this is not a knock against Blast either. It's just an eye-opener. I hope the space matures and people start to realize how ridiculous this is. But at the same time, maybe this is the new paradigm. This is the new way of launching a layer 2 or a layer 1 or any crypto protocol or project. We can't just do the same things over and over again and expect the same results. We have to, at some point, change how we launch. So maybe this is going to become the new narrative. That's what I'm looking forward to seeing is, do companies start launching like this? And, crypto's a copy-paste space. So I imagine some people are going to try their own campaigns like this. And yeah, it's going to be interesting.
I don't know. I got to play devil's advocate and say this is very concerning. Like, I don't know if that's a healthy way of launching a network, considering that they most of this cash, if not all of it, came in from speculation because nothing exists. And the team can always take some of this value, like TVL, they can exchange for their own tokens when they actually plan on launching it, take a portion of this cash and develop a network. They can develop a network for a fraction of what exists in this multi-sig wallet. And I don't really even know if they anticipated this much money coming in, but they can always build some blockchain or network now and pocket 95% of that TVL somehow. And so this is the concerning thing. There's no accountability, and I just wonder, what's going to actually happen. There are so many projects that are raising funds that don't get the funds they need like this, just because people are diving into things. I honestly didn't think there was this much liquid cash from retail or whatever kind of investors in this industry sitting around waiting for something like this. We've never seen it before.
Maybe it's not retail. It's disguise. Good. But yeah, I think you're right. It's not good or bad. We'll see. The worrying part is that maybe this team is genuine and authentic and they're doing everything right and they're going to hold these funds responsibly and then they're going to give them back. But who's not to say that the next 2 or 3 projects to mimic this aren't going to completely rug and steal $500 million worth of money, which is worrying. So I sincerely hope that's not the case, but I guess we'll see.
I guess we will see. Another thing that's concerning is that this is a multi-sig wallet, and so potentially a point of failure with maybe 2 or 3 weak points. And so whoever is the owner of this multi-sig wallet, hopefully they're taking safety precautions because they're now a massive target with a lot of liquid cash. And so a hack, a vulnerability or anything, and this is all gone. It's not some token that lacks liquidity. These are all cryptocurrencies that can easily be traded out into cold hard cash in this market. So best of luck to the Blast team. We wish them all the best. I hope they actually do build something. Doesn't take away the fact that our minds are blown about what's happening here. I really can't believe it. But anyways, everyone, thanks for tuning in for another. We've got an on-chain analytics video on Blast. We will check up once Blast comes to market and see what's actually being done by diving deeper into the token. But until then, thank you. Make sure you like and subscribe if you're feeling it, and stick around for more videos. Ciao, y'all.